Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Tuesday, 21st day of July 2015, and this is the daily report for gold and silver. Did we see a real bottom in the market, a potential key reversal as that market came down and hit $10, at 10.80 per ounce in yesterday's trading? Or as I heard one pundit call it, is it nothing more than a dead cat bounce? Interesting way to put it, but nonetheless, it is a statement that brings a lot to mind. In other words, have we seen a real bottom, or is this market just going to drift back lower? Now, we took a very, very aggressive stab at the market yesterday. Traders that took that call, we're in at roughly 1106 in that area. Our stop's at 93. I'll explain why I put our stop where I put that, but most importantly, we're not getting the kind of follow through I'd hoped we would see, but we are remaining right around $1,100 per ounce. The low in this session has been 97.20. It has gone as high as 1109.91, call it 1112. And as I said, it is currently around $1,100 per ounce trading on the spot market. Now, silver is also trading higher on the day, although nominally up about 3 cents on the day, currently at $14.97. Our downside target, if you recall, was around $14.50. We certainly got to that point yesterday. Low today, $14.61, high $14.93, and as I said, currently at $14.79. We'll touch on silver towards the end of the show. So traders, let's talk about our current position in gold. First of all, I want to address the stop that we placed, which is below 1093. Now, if you look at this is a 720-minute chart. I'm going to go ahead, let's blow that up a little bit. And what predicated that call was this green candle. As the market began to move back up, I felt that we might see some sort of potential bottom. When you look at the low here, it was around 96, but when we look at this candle's low, as you can see, let me place it as close as I can, it's roughly at 93.50. And so by placing it below 93, in essence, what we're doing is we're saying as long as we don't make a lower low, and that's why we're putting such a small stop in the market, because we're really taking a stab at this long. There's absolutely no doubt about it. We haven't gotten real confirmation in terms of a candlestick pattern that we've got a key reversal. The main thing that we were going on is the fact that we were looking for the market to go to 1080. Market, in fact, went to 1080. And solidly bounced off of that. You can see that by the nature of where this particular candle closed. However, on a daily basis, it then began to drift lower, hitting this low, and this is that low at around 93, and that's why our stop is sitting below this point. As it came up, I felt we could have an opportunity, but we certainly aren't seeing the follow through. And that's the one particular that has me concerned in the market, is whether or not it's going to form a base here and move higher. We would have wanted to see some real follow through today, not just whether it's short covering or things unrelated to actually buying entering into the market, because yesterday when you took a look at it, it wasn't dollar strength at all. In fact, the dollar contributed about $1 to the price of gold, and the rest of it was just pure selling. We had dramatic selling coming into the market. This market sold off. I've not seen this kind of a market move. Again, this is 120. You'll really see it on a daily chart, but I haven't seen this kind of market move. And, well, honestly, I can't remember when we've seen this kind of real move, certainly not this year. And so traders, it's really when we look at our daily chart that you get an idea of what kind of market move we saw yesterday. And that's this one single candle, this one drawdown that starts at about 1133, culminates at around 1080 according to records, but this is showing us around 1074, 1075 in terms of the low. It might have gotten that low. We can see the market just hovering at 1100 per ounce, and more important, it is green right now, so we do have a slightly positive day, but I'd like to see it a little bit stronger than we are seeing it and get that kind of a bounce. As I said, we've got a very, very tight stop in the market, and the reason for that is it's an extremely high risk trade trying to bottom pick here. If in fact the market continues to move lower and does stop us out, my recommendation is to just reverse the position, because that tells me we haven't completed the wave and we're going lower, and I would have to say substantially lower. Now, in the big picture, I don't think that we're in a bull market. I think that what we're hoping to see at this point is simply some sort of a bounce in retaliation for this tremendous downside move that really began at, call it 1240, all the way down to, below 1080 according to this chart. And so for those reasons, what I'm looking at as a best case scenario is that even within a bear market, if we're under the assumption that we concluded our fifth wave here, which is what we were looking at, we should get some sort of an A, a B, and then a C. In other words, we will get a corrective phase. That corrective phase will typically be comprised of 3 waves, an A, B, C, culminating in higher pricing. But that higher pricing, of course, is going to be short-lived, because should the scenario which has kept gold in this bear market continue, which is stronger dollar, weaker oil prices, and really a safe haven being that strong dollar and a strong equities markets, we would see it after this ABC return to a 5 count, 1, 2, 3, 4, 5, and that of course would take us to lower pricing, even below the potential lows or the lows that we hit on yesterday's trading activity. So as I said, high risk trade, there's no doubt about it. That's why I'm keeping the stop as tight as I am. If this market makes a lower low than that previous low, in other words, if it doesn't find support in this area, it will knock us out. But it will knock us out with a very, very small profit in terms of the big scheme of things, because on the upside, should we catch this trade moving the right direction, I think we've got at minimum probably about a $40 to $50 trade that we could actualize and could unfold should we get this ABC bounce. As I said, that's something we'll determine as this market unfolds. We're not getting the follow through that I hope for, but we're not seeing tremendous selling coming into the market either. So we'll have to see how this unfolds. But again, very, very high risk trade, as I explained in the trade alert I sent out yesterday. The reason that it's a high risk trade is we're acting on the basic assumption that we've completed a wave count, but we haven't gotten our confirmation yet, because I felt that once we got our confirmation, because it's a bounce, if we did enter upon confirmation, we would have already seen this market move from about 1100, which had really started from 1080, maybe up to about 1020, 1025, and that's what would provide us with some sort of a green candle and really give us that strong confirmation or that buy signal that we would wait for. We've already given up much, so I felt that the best method to really go into this trade is to keep that risk very, very small, and that's why it's just over $10 by a touch. As I said, maybe $13, $14 is what we're looking to risk, 15 on the trade. We're not looking to risk that much. We're looking to have a 3-to-1 risk reward ratio, and so for that reason we entered it. But as I said, caution's got to come into the wind, because if this market breaks and breaks through hard, it's going to go and test those lows once again. So we'll have to see how it unfolds. As you can see, market's trading steadily currently at about 1,100 per ounce. So traders, the big question should be, so what about silver? I didn't issue a call yesterday on silver. I did receive actually a couple of emails from clients that took silver long when I issued the buy recommendation in gold. I actually had one subscriber email me that they entered the market from the long side just before we signaled a buy trigger in gold. And the question is, why haven't I triggered some sort of a buy signal? And we're looking at a daily chart. We hit the low that we anticipated at 1450, but because silver tends to have a greater percentage drawdown when the market's moving down and a greater percentage uptick when the market's moving up, my sentiment was I want to see a little bit of that risk removed. I want to have a real confirmation in silver because of the extreme volatility of that market. I want to have confirmation. And so if we get confirmation on silver, that means we're still in gold. And then I'll go ahead and issue a buy signal in silver. That was the primary reason I held off. As I said, I did get emails from subscribers that took that call. If you're going to maintain that call in terms of a stop placement, and these are for the ones that emailed me, you really want to have your stops below this trigger point here, and it would be a very, very tight stop. I would put it in below, call it 1455, 1450 in that area, this being the low. If you really want to be protected, put it below 1450, giving yourself a risk factor, depending on where you're in at around 1470, 1478 in that area. That's the way I would handle that if you're in the trade. For our official documentation, we are awaiting confirmation before we actually enter this, and we will send out a special trade alert should we recommend that the entire subscriber base as a whole enter into the silver market. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.